Shadow banking is booming in Canada as Canadians look for riskier alternatives to traditional lenders amid the massive housing bubble that we currently have here in Canada. So let's see exactly what's going on. Private mortgage risk flagged by regulators amid growth in shadow banking. Okay, let's see what they're talking about here. Private non-bank mortgage loans that often come with higher lender fees and interest-only payment options are taking up a growing share of residential real estate lending in Canada, a trend that is poised to continue or even accelerate amid rising interest rates and tougher mortgage qualification rules. So essentially people are looking to get around those tougher mortgage qualification rules, and because of the rising interest rates, the amount they can afford with a traditional lender might not be enough for what they want because they have to get the biggest house that they can possibly afford. In many cases, you are only paying the interest on a private mortgage. This means that you're not actually paying off any of the principal, said Hudson Loke, Executive Vice President of Market Conduct at FSRA. He added that research conducted by the regulator suggests that many homeowners don't fully appreciate this difference and they may not understand what they are getting into. Don't you kind of think of the mortgage industry when you hear that kind of speak anyways, that they don't understand what they're getting into? I mean, even mortgage is just a euphemism essentially for debt slavery. So it's kind of mad when you see stuff like this happen. Then again, we are at such a stage in the bubble where you're going to have the dumbest money, you're going to have the weakest hands that are going to be investing into the market. And let's be honest, the fact that they're paying interest only, I mean, this is something that the traditional lenders are doing as well right now. A lot of the traditional lenders, because people can't afford their trigger rated mortgage that they now have, they are essentially letting them defer some of the payments. And by deferring the payments, they're still gathering interest in the background. They're going more and more into debt. People's amortizations are getting extended 30, 40, 50 years. But of course, the people don't understand or realize is when they come to renew, this all has to be put back in line with banking regulations, at which point they are likely going to default or end up in foreclosure because they're not going to be able to pay the gap that they need to pay in order to get back to square and being level with the banking regulations. Private mortgage loans tracked by FSRA and the Canada Mortgage and Housing Court fall into the broad category of shadow banking, defined by the Bank of Canada as bank-like activities that are exempt from banking regulation. And I mean, this just goes to show how big this market is, because they're saying in this article it is billions of dollars, so it's not like a small amount of money. But even before last year's steady pace of interest rate hikes combined with bank stress tests to push some home buyers out of the traditional real estate market, private non-bank mortgages had soared 72% to $22.4 billion in just 2 years in Ontario, capturing 10.6% of the market by 2021 according to the FSRA, which published its latest figures on February 27th. So they were talking about 2021 and 2023 when they just published their figures, and that just goes to show how far behind we are looking in the rearview mirror right now. We're talking about 2021 here. The amount of people looking for this type of lender surge. And why would that happen? It's because everybody was looking to get into the housing market. The mania was in full swing, as we can see by the bubble chart. You can see that during that mania phase, it's also known as the greed or delusion phase or the new paradigm phase. The new paradigm is essentially, hey, we've just realized housing prices are never going to go down. And then, of course, that's basically when you're at the top when you hear people calling out stuff like that. And we definitely heard that throughout 2021. So it's kind of insane, but you would expect it when you're in the larger context of a bubble and you're in this mania phase. Why would it be in Ontario? Well, that's the biggest, most bubbly market in Canada. Moreover, a subset of private real estate lenders known as mortgage investment companies, or MICs, outpaced overall mortgage debt growth in Canada in the second quarter of last year. While mortgage debt grew by close to 9.75%, assets under management of the top 25 MICs in Canada grew by more than 22% in that period. So they are turning to riskier and riskier lenders. This just kind of shows that even in 2020, 2022. You were seeing people just trying to do whatever it takes to get into the housing market. Maybe they don't understand. Maybe they just moved here from another country. But then you have to ask the question, how on earth is anybody willing to lend them money? And the reality is all these lenders are lending money because they think that home prices will go up infinitely, because that's what's happened over the past 30 years. Canada has seen some big crashes in its past, and it's likely going to see another one now. Let's see what else they're saying here. This unregulated segment of the industry has likely attracted a higher number of borrowers that were not able to get qualified with a traditional lender in the context of rapidly rising interest rates, the CMHC said. And I mean, this is what you would expect to normally happen during a bubble, right? You would expect that people would be trying to exploit every loophole that they could possibly find in order to get into the market, because it's their belief that home prices will just rise indefinitely. And this is just still out there. This mentality is still there, and that's what people don't realize. And we're in this denial phase / return to normal phase, and that's why prices can rise during this phase. Prices can rise because there is that mentality. The FOMO is still out there. You've still got a large number of sellers who are just holding off, and they can hold off right now. But can they hold off when they lose their job? No, they can't. That's when you get the forced sellers entering the market, and that's when you end up with the big crash, because a lot of people are also in default on their mortgage. And it's an unregulated segment of the industry. You know, I thought we didn't have that in Canada. What is going on here? The banks are so solid. Yeah, guys, you know my thoughts on the big banks in Canada. Benwell suggests trends in the private market are being driven by the mortgage stress test, which requires banks to qualify uninsured mortgage holders at the contract rate plus 2% or 5.25%, whichever is greater. As the Bank of Canada's overnight rate climbed to 4.5% in January from 0.25% a year earlier, the stress test became more onerous. So essentially, they're saying now, because they're stress testing them at higher rates, that's likely going to be like 6-7%, a lot of people are looking for other options. And this just goes to show it doesn't stop them. When they've got it in their head that they want to buy a home, they're going to go do it, whether they're committing fraud, whether they're going for a private lender, or whether they're going to one of these MIC. Let's see what else they're saying here. That's the biggest thing that's changed in the past little bit. What we're seeing drive people towards the private lending market is that they are just not getting approved in the traditional lending space, he said. And that just goes to show you how bad these people are, and that the fact is that they shouldn't be getting money lent to them. I mean, the fraud in the Canadian housing market, the fact is it's just rampant. And then you've got that coupled with the fact lending standards weren't that great either, because I have been through the process. I've seen how this stress test has been completely broken, and the lenders are still willing to lend you a hell of a lot of money which you'll never be able to afford to pay back, and people are normally taking out that large amount of money. They're usually maxing it out to get the biggest home that they can possibly get. And then the banks also don't fully appreciate what's going on. A lot of what their outlooks have been like during the earnings that we've seen come forth is that they think that mortgage growth is actually going to be pretty good. They're just completely clueless to what is going on. So if you think about it, if a bank thinks that mortgage growth is going to be good, then guess what? They're not going to prepare for it to be bad. And what does that lead to down the road? That leads to big problems, doesn't it? We've seen that with the global financial crisis. And Canada is really just setting itself up for a crisis that is just going to be absolutely massive. One of the biggest real estate and banking crises in the world for a country as a percentage of GDP. Because when you look at household debt, when you look at private debt, it looks like a complete recipe for disaster. So anyway, if you've enjoyed this video, you might like that video there. You might also like this video here. Don't forget to sign up for my free email list in the description. Thank you so much for watching. Thank you so much for commenting. I read all your comments, so please leave a comment and we'll chat down there. I will see you in the next one.